Welcome to The Explainer. Today, we're diving into the really confusing signals coming out of the Indian economy. Seriously, it's a story of absolutely incredible growth that's suddenly running up against some unexpected caution, and it's giving the country's central bank a massive headache.
So, here's how we're going to break it down. First, we'll lay out the puzzle itself. Then, we're going to look at all the clues, the good and the bad. We'll get into the huge debate this is all causing, and then finally, we'll figure out what this all means for India's next big economic move.
All right, let's get right into it. The heart of this whole thing is a paradox facing the Reserve Bank of India, the RBI. They're looking at two really powerful economic signals that are telling them to do completely opposite things. And this right here is the billion-dollar question. I mean, on one hand, you've got this explosive growth, the kind of thing that usually makes a central bank worry that the economy is about to overheat. But then on the other hand, inflation has actually dropped below the bank's own target floor. That's a signal that normally screams for stimulus. So what do?
This analogy just nails the dilemma. Imagine you're the RBI. You're in the cockpit, and a massive policy meeting is just days away. One of your main instruments is flashing climb, 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 while the other is blinking descend, descend, descend. Do you listen to that powerful growth engine, or do you pay attention to the low inflation reading and change your altitude?
Okay, so let's look at that first instrument, the one that's telling us the Indian economy is absolutely booming. The hero of this whole growth story is this number right here, 8.2%. That's the GDP growth for the second quarter. I mean, that's a huge figure that suggests the economy isn't just bouncing back, it is firing on all cylinders. This is the kind of growth that makes India one of the fastest growing major economies on the planet.
And look, this isn't just some abstract number on a spreadsheet. You can see the impact right on the ground. Check out these sales figures from the auto sector in November. Maruti Suzuki, their highest monthly sales ever. Tractor sales are up 32%, which is a great sign for rural demand. And commercial vehicle sales, they're just surging.
Now, the commercial vehicle data is what's really fascinating here. See, sales of trucks and buses are a classic indicator for the health of an economy. It means goods and materials are moving, which is a direct measure of economic activity. So when you see a 102% jump for a player like SML Mahindra, well, that tells you that industry, logistics, and infrastructure are all humming.
Okay, so things are looking good, right? Well, let's move to the other side of this puzzle, because while that growth story is strong, the other instrument in the cockpit is flashing some pretty serious warning lights.
And this is where the plot really thickens. For every strong signal, there seems to be this contradictory piece of noise. You've got that amazing 8.2% GDP growth, but it's paired with inflation that's under 2%. Record auto sales are happening at the same time as a huge correction in the electric vehicle market. It's confusing.
A really big warning sign is coming from global markets. After a little bit of good news in October, foreign portfolio investors, we call them FPIs, started pulling their money out of Indian stocks again. This is a big deal because it shows that international confidence is a bit shaky, and it puts real pressure on India's financial system.
And just so we're all on the same page, these FPI flows are absolutely crucial. They aren't just numbers on a screen. They have a direct impact on the country's balance of payments and the value of its currency, the rupee. So when this money starts flowing out, it's a serious signal.
We're also seeing some cracks in these really high-growth sectors. Take the electric two-wheeler market, for example. In November, the market leader, Ola Electric, saw its registrations just plummet by nearly 50%. A drop that steep signals a pretty severe demand shock, even in a futuristic sector like this one.
So, you've got all these conflicting clues on the table. You have a booming economy on one side, but low inflation and some external risks on the other. And it all leads to one massive policy debate.
Industry leaders are looking at those low inflation numbers and they see a clear green light. Their argument is pretty simple. With prices so low, the RBI has the perfect chance to cut interest rates. That would make borrowing cheaper and basically add even more fuel to this growth engine.
So this is the fundamental disagreement, right? On one side, you have the case for a rate cut. Inflation is low, so let's boost demand and get people spending. But on the other side, you've got the case for a pause. 8.2% growth is just too strong to justify a cut. There's a risk of future inflation, and this is a big one. India needs to keep its rates attractive to stop more foreign capital from leaving.
So with these two really powerful arguments clashing, how in the world does the RBI weigh the evidence to actually make a call?
Well, when you lay out the key data points like this, almost like an evidence board, the picture gets a little clearer. That incredible GDP growth and the fact that foreign money is leaving are powerful arguments to just hold steady, to pause.
The low inflation and slowing manufacturing argue for a cut, but right now, the risks associated with cutting rates seem bigger.
And because of that, the consensus among most economists is that the RBI is going to choose stability over more stimulus. The central bank will likely hold interest rates right where they are, using that super strong 8.2% GDP number as the reason to prioritize financial stability, especially with those external risks looming.
And that decision leaves us with a really critical question for the future of the Indian economy. By choosing stability right now, the central bank is basically making a bet. And the question is, can that powerful growth momentum keep going even without the extra fuel of a rate cut?
So that's our explainer for today. It's a fascinating economic puzzle with no easy answers. What do you think the RBI should do? Should they cut rates or should they pause? And what do you think is going to happen to India's growth if they do decide to pause? We would love to hear your take in the comments below. Thanks for watching.